Good day, guys. How are we all doing? I hope we're all good. So I'm just going to do a quick back test on DXY as per request, and we're just going to look into price action from Monday to Friday last week. So let's see. This was Thursday. I'm just going to click play here. So the main thing we just want to look at is the daily. So based on how we trade, based on our strategy and trading system, we want to pay much attention to the daily time frame. So I'm just going to click play here. Let's see once we get to Monday, which day was this? Okay, this was Friday. So at market close on Friday, you can see that price was within this range here, excuse me, within this range here. So what I usually advise is if you see your price like caught up in a bit of a tight range in between the 50 EMA and the 13 EMA. Usually we want to wait for price to come out of this range so that we can have a bit of a clear bias. So as you can see here, price was we're sort of coming up from this high with head and shoulder pattern. We had this order block here and liquidity taken above it. And we had these lows here as just a point of interest. So we are going to first mark this particular level as a point of interest. What else do we have to our left? We also have this lower low here. So for me, it's also a point of interest. Why I'm using that one is because if you look closely, it's almost in line with the 200 EMA on the daily charts. Then TDI, initially, we were trading above the 50 level. So we were actually in an uptrend until we go to this area whereby price comes back below the 50 static. So we're just going to put a solid black line on our TDI and we are just going to adjust it to 50. Okay, so up until about here, you can see this is where, excuse me, this is where the market structures was also broken to show that there's a possibility of a trend change, or the uptrend basically was coming to an end. So looking at the daily, like I said, I like to pay attention to my moving average. So this is the 50 EMA, this is the 13 EMA. So as long as we are in here, I don't really like to trade unless, of course, maybe I'm scalping, but I want to wait for price to either come back above to the top or come to the bottom for me to have a directional bias. So we're just going to click play. So now we're coming into Monday. Okay, this was Monday. This was Tuesday. So let's wait here. So on Monday, nothing really gave us a solid direction here. The only thing I could say I could see is this push down broke a few structures here. Like I said, structures being broken, and we had a little bit of an imbalance, which was right here, or a fair value gap, as you might call it. So we had a bit of an imbalance there. But since we're on the daily, I'm not really going to mark it because I want to keep this chart a bit clean. All right. So Tuesday, we fell back into that range. So up until now, there's no trade. We're still watching. So Monday, no trade. Tuesday, no trade. Why is there no trade? Because based on my trading strategy, I'm only looking for sells when my price is trading below the 13, for example, right here. Right here. These are the moves I'm trying to look for. And I'm only looking for buys if I get price action showing me a reaction of the 13 EMA with a familiar candlestick, right? Like right here and right here. Those are the things I'll be looking for. So here I couldn't buy because there was no clean confirmation of a daily close above the 13. And I couldn't sell because we're still in this tight range, which I mentioned. So now we're going into into Wednesday. Okay, let's see how this candlestick is going to look. Okay, let's pause. Okay, so Thursday gives us this candlestick. Some people will call it an indecision candle. But if you notice what happened here is price took out the highs from Monday, Tuesday, and they also took out the lows from Tuesday. So what I want to do, I call this qualifies as a liquidity sweep to the top here, right? So what we're going to do is we're going to mark the high as a point of interest, and we are going to mark the low as a point of interest. So how do I approach trading? When I've marked my zones like this, since they are now points of interest, what I'm looking forward to is if price is going to come back above the 13, right? They have to come back above the 13 and above the zone and stay above it for me to look for buys. If I'm going to look for sells, they're going to have to come below the 50, since remember we've got this tight range here, so they're going to have to come below the 50 and below this range and stay below it for me to actually look for sells. A variation of these setups is if these moving averages were not here, we were going to look for a potential liquidity sweep above here, then we can look for sells coming back to the bottom of this range, or if they swipe the liquidity here, we're going to look for buys coming back up to these highs. So that's another variation in case you see a setup like this forming. Usually, sometimes even on H1, you can still use this approach to actually get a setup for the day. And this is like for day trading, right? Excuse me. So let's just check how the H1 was looking like after Wednesday so that we can pinpoint some points of interest within this area. So right now we were getting ready for a buy or for a sell. So jumping to H1, I hope they'll show us price action for the whole day. So let's see, this was Wednesday. You can see how price moved, pushed up, pushed down, came back to close right where they opened. Again, you can also see all the moving averages. Excuse me. Hey, sorry about that, guys. All the moving averages were in between the price. So usually when the moving averages are in between the price, you cannot use them for an entry. That's number one. Number two, it also shows that either your market is choppy or it's ranging. So you cannot use your moving average. You need to use other tools. So looking at this price action, do we have any points of interest here? The only thing I would say I notice is a bit of an imbalance here after this structure was broken. And if I now look to my left, I'll notice that I've got Monday's high here, right? And I've got Tuesday's high right in close proximity. Right, so we've got equal highs or almost equal highs. Then we've got a liquidity sweep of that. So based on what we've learned in the course, we know that if we get equal highs, usually we'll get a liquidity sweep and price is going to start doing this most of the times. Or if you're in a downtrend, price will create a high, right? So we were coming up, we create a high, then maybe a reversal pattern, start to break structures. Once the downtrend starts, we can get equal highs whereby price actually comes and take out liquidity here, maybe with the pin bar, and continues pushing down. That's like an example of a downtrend. So here we see that we got equal highs, and our higher time frame is coming from a certain point which we believe could be a higher high. So equal highs, liquidity sweep, market structure shift. If you see a setup like this, the next thing you're looking for is an imbalance or a gap in between the candles. So here there is no gap. You can see from this low to the high of the third candle, there is no gap in between. But if you take a closer look now from this low, first candle, second candle, to the high of this third candle, there's a bit of a gap in here. So once you see that gap, you just want to mark it as a point of interest. So we're going to mark it. So remember, the market is closed. It's 1, 2, 3 days of no trades or no setups, right? So we've marked our point of interest. Now we are preparing for Thursday, right? So we've got our points of interest marked. We are now anticipating a potential of a sell. So let's just go to back to the daily and scroll up. Again, remember, we are waiting for a break of this low for a potential sell signal. All right, or sell setup rather. Okay. In this bearish day here, so I'm just going to go to H1 so that we see how price starts to push, and pay attention to our point of interest, pay attention to our fair value gap, right? So I'm not sure if I can rewind, but it would have been nice to rewind this. Let me see. How do I do this? Okay, guys, you guys should Bear with me. Let's see. Okay, let's start from here. Okay, scroll back, click play. Pause. Okay, Wednesday is done. So we are now going into Thursday. So going into Thursday now, we are now, isn't we have our points of interest from a higher time frame. We know what we're waiting for here. We know what we're waiting for here. We know what happened here. We've seen what happened here. We've seen the market structure shift. We've seen the imbalance. We are now waiting for a break or for price to push up and break, or maybe come here and stay in the range and just continue being choppy. These are just probabilities of what could potentially happen. So I'm just going to click play. Let's see now how Thursday price started to move. Okay, Thursday midnight, price reacts on the imbalance, starts to push down aggressively. We break the low on H1. Let me pause there. Again, remember the best setups we are looking for happen on or near the 13 EMA with a nameable candle. So what you want to see is a pin bar, a bearish engulfing, a doji, or an inside bar, right? Whereby the candle to the left is engulfing this bar, but all these are forming on or near the 13 EMA on H1. This is for day traders. All right. And it has to happen like within your trading time or within your session trading time. So prices showed us that we've broken. Let's see if we're going to get a retest of either the zone or the 13 EMA. And now we are approaching London session. So price will be moving. We still on the sidelines, probably still sleeping depending with your time zone. Okay. London session opens. We get a bounce. Price pushes up, liquidity sweep above the initial Asian high, coming towards the 50. Let's pause. All right. Okay, did I pause? Did I pause? Okay, let's wait here. So London session really didn't give anything here. We got price breaking out and coming back into the range. But in terms of the 13 EMA, which is our point of interest, there is nothing we can use here. Right, we're still waiting. But what you notice is after the respect of this particular imbalance, price now gives you what? A doji candle. This candle almost looks like the one we had on the daily. So you can still use the same strategy. You want to mark the high of that candle. If you want just to understand or have a bit of a clue of what price wants to do, and you want to mark the low of that candle. So again, you're waiting for either a break to the top or a break to the bottom, just like we're anticipating price to do right now based on the market structure we have. So price is giving us like a doji type candle with London highs taken out, price coming back and closing below the 13. So remember, this is New York session. This is New York session, and we are now looking for a setup to actually sell. But again, a high probability is going to come if we come below this daily zone from that Wednesday candle, right? So we're watching price. So from here, you can go to your 15 minutes. So as soon as your H1 gives you something to work with, you can now go to the M15. And on the M15, what are we looking for? Let me show you what we'll be looking for. On the M15, we are waiting for price to give us a pattern, a break of structure, retest of the 13 EMA, then we sell. If we miss that sell, we're looking for a retracement and another sell. Okay, I'm not sure if you guys are going to be picking the sound from outside. Someone just cutting the lawn. I'm sorry about that. So if you miss the first impulsive move, you want to look for the second impulsive move. So all these setups have to form on the 13 EMA, right? So let's just jump, let's click play. And we also have this red line, which is yesterday's low. So that's a point of interest. We get an aggressive push down, right? So the first impulsive move has happened. We've come back below our point of interest. What are we looking for? We are only looking for one thing, for price to retrace into the 13 EMA or this zone for a retracement, and we are in that trade. If you've got a selling bias, here's one tip I want to tell you. So let's say our moving average is going to come like this, and we are in a downtrend, and you know you're looking for sells. Sometimes price will come back above the 13. So we're not selling until we come back below. That's one thing we need to just pay attention to. Also, if we get a reaction right here, we can still look for a sell because these are just variations, and different market conditions will give you different price action, but you just need to understand the bigger picture of where your price is going on a higher time frame. So once we can still jump here to the H1, let's just see how the candles are looking like. And one other thing, if price is far away from the 13, you want to wait for what? For a retracement. So that retracement, same thing, you can either wait for it on M15 or you can wait for it on H1. So we're going to click play. We're now anticipating a retracement now. Okay, price starts to retrace, pause. Right. What are we looking for? Okay, okay, we post. Okay, price sort of through that bar. But anyways, this is what we're looking for. Soon as we get this week, for me, any week I see happening on a 13 EMA against my direction trend, it qualifies as a stop hunt, especially if it happens on the 13 EMA. So soon as that H1 candle with the week closes, remember we've now retested our point of interest right here. We've also bounced off this high, of which I think there was a sell here on M15. I'll confirm just now. So you want to mark. Soon as that green candle, you just put a line. That green candle closes with a spike. You put a line. You come to M15. That's where you're now waiting for price to close below the 13 EMA. Once you get it close below the 13, the close happens here. But from here, you can see we've got this inside bar here. On the 50, we got this order block here. These are what I call confluences lining up. And if you're a day trader, this setup has to form before 10 p.m. GMT plus 2. For you to actually execute this trade, it has to set up before 10 p.m. Oh my God, the sound outside is so annoying. Okay, guys, I'm sorry about this. There's nothing I can really do about it. Let me. Okay, guys, forgive me. I've got no control of what's happening outside right now. So what I'll just try to do is just explain over the sound, and I hope it's not really affecting you that much. So anyways, we know we're selling. We've got an inside bar. We've got an order block here. Soon as we break, I want you to notice that price is a bit far from the 13 EMA, so maybe you might wait, but you can also take your sell here. You can take your sell here. This now depends with how you understand price action. There are multiple points of interest here. The retest on its own of the daily zone, it's an entry based off this inside bar, based off price bouncing off the previous day's low, which is this red line you see. We also have the 1550 EMA on that same point. We also have this stop hunt, which tapped on the 200 EMA, and we have this order block to confirm that you are actually in a sell. So you can enter at the top, you can enter with a sell stop. Sometimes price will retrace into the OB. Sometimes price will retrace into the, into the 13 EMA. That all depends with you and how you're understanding price. So you can enter here, you can enter here. But for me, once I see this, my next time frame which I go to is the 3-minute time frame for my entries. I start to look for lower lows and lower highs or any retests of the 13 EMA on the 3-minute time frame. That will be my entry. So I don't mind missing this entry at the top. Price drops, we break the order block. You can enter with a sell stop, like I said. As price is dropping, notice the 13 EMA is my point of interest. 13 EMA pin bar followed by a bearish engulfing. That right there is my entry. As long as it happens before 10 p.m., I've got my reasons for that, but as long as it happens before 10 p.m., this was 21.48. That's me going into that trade and actually selling. Stop loss will go above the pin bar, the last pin bar I see, and my risk to reward will be 1:3. So after I do this, the next thing is just to allow price to play out. So my bias is coming from the daily, whereby I need a bias. I rarely use the H4. I just sometimes use it for market structure. Then my next time frame is the H1, and I want to see 13 EMA reaction in relation to this bias. So these two time frames are best friends. H1 13 EMA just is to confirm my bias. M15, I'm looking for 13 EMA retests, and the impulsive move has to be there. I need to see an impulsive move first. So if I'm selling, I want to see this. Once this happens, as they retrace, that's my entry right here. If for some reason I miss that entry, maybe because H1 was not lining up with the M15, I'm going to wait for the second impulsive move. And all this has to happen on or near the 13 EMA. Then I take my entry. As this happens, the best risk to reward ratio, of course, I always look for it on the 3 minutes, like here. So I get a pin bar on the 13 EMA. And also take note that this is the first pin bar from that high which bounced off the daily time frame. So it might look like a late entry, yes, but I'd rather wait for something which is systematic or something which I've backtested for multiple times. So as soon as I get a pin bar and a bearish engulfing, I'm in that trade, map out 1:3. And usually DXY is correlated to EU. Excuse me. So I want to, if I'm DXY is going down, that means on EU at this exact point in time, I'm looking for a buy. So let's click play and see if this setup would have played out. Price comes back to entry and gives you another doji candle. So that's a chance for you to actually scale in if you are not in this trade, this candle right here. So entry, 1:3. If you are risking 1%, just want to pause here. Okay, TP hits. If you are risking 1% and going for 1:3, this is what I've tested. My system mainly works with a 1:3 risk to reward ratio. So this trade actually plays out. And if we go back to M15, just so that you can see how the candles are looking like. So we had this breaker. We have already confirmed we are selling. We get a nice retracement with a doji. And that right there is an entry. So you can even wait for M15 to close. Then you can enter. Then this was what Thursday's trade, which would have been a win. I'm not sure if I should end this session now, guys, because this noise is just too much. I have a feeling that it's going to affect this sound. So I'm just going to end this session here. I'm sorry about that. I'll try to do maybe a part 2 about this. But before I close, EU Thursday, this was the trade. You can see from Monday, price was showing higher highs, higher lows. But the best setup happened right when we confirmed the sell on DXY, and EU also gave us a clean buy. Maybe I should just try to quickly run through this H1 play. I'm trying to rush into Friday's price action so that I can complete this before the sound even gets way too close to me. So we catch our trade, a nice sell coming into Friday. We now have a selling bias. On the daily, price is also outside that range now. So we're looking for sells. Any reaction of the 13 EMA on DXY will give us a sell. And that means on EU, it will be giving us a buy. So price drops. We've hit a higher time frame zone here, which is a zone which you could still have targeted on this setup as well, just depending with how you understood price. So here price was pushing up 13 EMA, we get a pin bar. As soon as we get that pin bar, we want to jump onto M15. I'm going to rush through these guys because of the noise outside. M15, you can see price is bouncing off the previous day's low. We've got it close below the 13 EMA going into New York session. We've got this little stop hunt above this level, which is a liquidity sweep. 3 minutes, I'm now looking for an entry. So I'm just going to rush through this. You guys just have to forgive me. Although my entries, I prefer them to be in New York session, but let's see. So from here, I've got the first impulsive move, second impulsive move. I might consider a sell right here. 1:3. Let's see if we're going to get another possible entry in New York, because usually New York will do what we call a stop and maybe above the London highs. Sometimes that happens. Okay, so this is New York session. We are waiting to get a break of this level to confirm our sells. Right, we in this trade. So price just continues melting. Continues melting. Retraces a bit, and I think we've almost hit TP on a 1-3. I think our 1:3 was right. Right. Okay, price is already way below. So this would have been how you would have approached your trading. So remember, 13 EMA on H1 is your best friend. If DXY is showing you a sell and any 13 EMA rejection like this, here we've got a pin bar. Here we also have a pin bar. We are looking to jump into the next big candle, and you can see even on EU, we had a nice 13 EMA bounce right here. And this would have been a sign for us to actually look for that buy. And you always wait for the 13 EMA to close on H1. Then you go to M15, confirm if you're above the 13 EMA. Again, just confirmation, price trading above the previous day's high. Open price, 50 EMA. 3 confluences lining up on M15 after H1 and the daily have confirmed a bias. And you can still enter right here, or you can go to the 3 minute for a beta entry. I think that's it for me, guys. The noise outside is so annoying. I hope it doesn't affect this video because I'm going to be sharing it with YouTube. So if you watched until the end, thank you so much. If you want to jump into a day trading mastery course, if you want to purchase it, let me know. If you need mentorship, let me know as well. I'll try to leave some links in the description. If you watched until the end, thank you so much. And I'm sorry about the noise. If this mic is picking up the noise from outside, enjoy the rest of your day. Good trading.